Goldman Sachs is the leader in investment banking and markets. Extraordinary people. They work hard every day to serve our clients, and the relative performance in that business has been fantastic.
Banking, investing, marketing, etc. are all risky fields because we don't know when the market will collide or rise. It's not a simple task, and there are a few companies that are popular among them. Goldman Sachs is an American multinational investment bank and financial services company. Without any delay, let's dive into the topic. On the Fortune 500 list of the largest American corporations by total revenue, Goldman Sachs is the 55th largest company and the second largest investment bank in the world by revenue. The Financial Stability Board regards it as a systematically important financial institution. The business has come under fire for its unethical practices, collaboration with authoritarian governments, a revolving door of former employees who maintain strong contacts to the U.S. government, and speculation in futures that drives up commodity prices. The company has been criticized by its employees for its 100-hour work weeks, high levels of employee dissatisfaction among first-year analysts, abusive treatment by superiors, a lack of mental health resources, and extremely high levels of stress in the workplace that cause physical discomfort, even though it has made Fortune's list of the 100 best companies to work for. This is largely because of the company's high compensation levels. The financial crisis was a major factor in the beginnings of Goldman's foray into consumer banking, and in the years 2008 to 2009, Morgan Stanley actually changed its status to that of a bank holding company. They became bank holding firms out of fear that Oregon State lingo attacks would fail during the financial crisis. That completely altered the situation because they would be subject to Fed regulation and would be able to recover FDIC holdings.
Goldman Sachs is going from caviar to cheeseburgers. For 150 years, Goldman served the most important people in the world, heads of state, heads of corporations, millionaires, billionaires, and now they're also serving you, the consumer.
The Goldman business model has been questioned for a long time, and at the time, Lloyd Bank, the CEO, strongly defended their trading-centric approach while also suggesting that perhaps we could go these alternative routes. This is what has happened in the post-financial crisis age.
In a way, we're actually, even though nobody would think of us as a simple kind of firm, we're really an investment bank and an asset management firm. We're just really kind of the investment banking side of the Glass-Steagall gives, and we don't have a fully integrated. Our balance sheet is like, $900 billion, not trillions of dollars. So actually, we're smaller and are simpler, and not simple, but simpler. But you couldn't be running an enterprise today without thinking of the consequences of the capital.
An offsite meeting took place in 2014 at Gary Cohn's vacation house in the Hamptons. According to the legends behind the founding of Marcus, after leaving this meeting, they decided to pursue consumer banking, use their enormous balance sheet, and advance in this industry. They said they had no exposure at that time and would therefore avoid cannibalizing any of their current enterprises instead of focusing on the Jake Morgans at the Bank of Americans of the world. In 2016, they introduced a product named Marcus, prompting the question, should they make a bigger issue of this? How significant must this be in order to affect the value of the dollar? In 2018, David Solomon takes over as CEO. He makes the decision to take over the company that has been protected as one of his first actions. He chooses to include it in the private wealth management and investment management divisions. David Solomon felt firmly that these firms should all be in the same division because they all serve the individual. Now we are going to discuss about Goldman's trouble with consumer banking. What went wrong and what's next?
Today, we're introducing a brand new service, and we call it Apple Card.
The Apple Card was unveiled in 2019. Since they had no prior credit card partnerships, the Apple Card was a major victory for them. Additionally, since it is from Apple and there are millions of iPhone users worldwide, it's the biggest technological advancement.
3 years ago, when we had our first Investor Day, we laid out a clear strategic plan for the firm. We laid out a plan to invest in our core businesses. We pointed to 4 areas that we thought were interesting opportunities for the firm to grow: asset management, wealth management, transaction banking, and also consumer banking.
We must keep in mind that in 2021, the Goldman Sachs ruled the globe. In the investment banking league tables, they were in first place. Through IPOs and merger agreements, they were making banks.
You had other financial firms literally failing. Remember, you had Lehman Brothers, and you had Bear Stearns, you had a bunch of others that failed. Goldman Sachs was strong, and they were so strong that coming out of the financial crisis, they dominated the trading activity. And so you're like, Goldman Sachs is on top of the world.
They consequently believed they were earning enormous profits on this asset at the time, even if investors didn't place a high value on it. They desired to increase rather than decrease the amount of money they were investing in the markets. When the market turns in 2022, there is suddenly much greater sensitivity to expenses, which are ballooning, so they start planning more money for markets at the exact wrong time. To support this situation, let me tell you what Paul Argenti said. According to Paul Argenti, professor of corporate communication at the Tuck School of Business at Dartmouth, I think the consumer business was a distraction totally off-brand from what I know about Goldman, and if they were going to do it, they needed to do it at a much higher and more prestigious level than they did and for the market. So the question is, what went wrong? The idea driving this was that if you guys could handle investment banking, providing advice, and carrying out the most complicated transactions in the world, and if you could survive the financial crisis undamaged, you could definitely handle retail banking, as that's presumably simpler in practice.
I think we tried to do too much too quickly, and as a result, our execution in some areas of this wasn't good.
In terms of personal wealth management and private wealth management, it's really the difference between having dozens or perhaps hundreds of clients you know, and, in the case of investment banking, having millions of clients who all do a little bit of business with you and may have a little money with you, and doing that at scale in a way that makes sense, which is very challenging. So, what's next?
Banking and trading is an A-plus business, but it's a cyclical business, and that's why they've been trying to diversify away from that. But everything that's kind of happening in consumer banking, it's been a mess. It's disappointing to hear David talking about how, they misunderstood the competitive advantage. You think about it, right? That's what they advise clients on, competitive advantage. And so it looks like they won't even take their own advice when it comes to their consumer banking business.
It's also fair to conclude that by investing so heavily in a venture he ultimately abandoned, he has lost some of his credibility in recent years. To be fair to him, he has performed admirably in the trading and investment banking departments, which make up Goldman Sachs' primary core operations.
Our market shares across our core business continue to be excellent, and they've actually grown. In our banking and markets business, we've increased our market shares by 350 basis points, our wallet share, over the last few years. Of course, we haven't executed perfectly on everything, but when I look across the spectrum of work we've done to grow the firm, to improve the way we serve our clients, to strengthen our business, we've made a lot of progress.
You may remark that those companies are run by veteran folks. They had a lot of momentum, and whoever was actually in charge of those operations would essentially carry on with what he has been doing, improving market share over the past few years while also moving the company forward. It truly is one of the challenging tasks, comparable to visiting new businesses that may require evaluation and didn't go well. The criticism would be that. There are many ups and downs for Goldman Sachs, and there are many likes and dislikes to their strategies. Most of them commented about it, and I'll include one among them. According to Paul,
if they have the right strategy and the right leadership, I'm convinced this organization can do anything it wants.